Ladies and gentlemen, good day and welcome to the GREAVESCOT Limited Q1 FY22 earnings conference call. From the management we have with us Mr. Nagesh Basavanahalli, Group CEO and MD, and Mr. Dalpat Jain, Group CFO. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks are concluded. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now hand the conference over to Mr. Nagesh Basavanahalli, Group CEO and MD of GREAVESCOT Limited. Thank you, and over to you, sir.
Thank you. Good morning. Good morning, ladies and gentlemen. I hope all of you are keeping well and staying safe in these difficult times. I welcome you all to the GREAVESCOT Q1 FY22 conference call. I would like to begin by just starting off with an overview of the business, and my colleagues will talk in more detail as we go through. As we are all aware, the nation was under a lockdown during most parts of the first quarter due to COVID-2. Greaves continues its trajectory of diversification even in the middle of that lockdown. The Q1 faced lockdowns as the initial stages of the pandemic were ongoing. The company had plans to from a business continuity, from an employee and our stakeholder well-being, and in fact vaccination of our people and some of our related immediate stakeholders. That was one of the first priorities for Q1, and glad to report that majority of our people are vaccinated. Our diversification strategies, which started about 4 years ago, have aided in the resilience of the company, and we continue to see that progress. We have restructured a business internally to focus on each business and align more efficiently in delivering value to our end customers. To that end, we have now restructured into 3 major businesses and 2 new business lines. Let me elaborate. Our core GREAVESCOT business, or the Greaves core business, which was auto plus non-auto, is now combined under one vertical and one management team. Then we have retail solution, Greaves Retail, which will be the traditional aftermarket plus the Greaves Care plus the Greaves Retail. Then we have the e-mobility solution, which is the Ampere suite of products. In addition to that, we have 2 newer businesses, FinTech, Greaves Finance or Greaves FinTech, and Greaves Technology. So with that, let me reiterate, it is the Greaves core business, which is auto plus non-auto, Greaves Retail, Greaves e-mobility, which are the 3 primary businesses, and Greaves Finance or Greaves FinTech and Greaves Technology. This also is in line with our strategic mantra that we started 4 years ago of moving closer to a consumer, moving from a traditional B2B to a B2B plus B2C, and extracting life cycle value. Now let me move to some of the other businesses. Ampere Vehicles, the fast-growing e-mobility business of GREAVESCOT, has accelerated India's EV journey. Very happy to report that over the last several days, the team, thanks to the collective hard work of the team, between our two-wheeler and our e-rickshaw, they have crossed the new milestone of 100,000 EV customers, over 400 towns across the country. So over the last few years, since the acquisition, Ampere Vehicles has emerged as one of the leading, affordable, reliable electric vehicle brands in the mass mobility segment, with increased acceptance from both B2B and B2C customers. Recent government initiatives and FAME 2 policy have also proved beneficial for this industry. We have passed on the benefits to our consumer, ensuring we cater to a much broader customer base. In line with our company's strategy of expanding e-mobility, our Ranipet plant, which we had talked about, will be launched later this year. Happy to report that the progress on that is going well. We will also be looking at multi-brand e-mobility retails and to provide a one-stop shop for all things related to EV under our Greaves retail umbrella. Greaves has continued to build on its existing portfolio by investing in technology, talent, and the entire life cycle. Talent has been added in some of the newer areas, whether it is e-mobility or finance or some of the services area. To begin with e-mobility business, we have now established a strong digital network. We are also going to be launching an experience center for Ampere to enhance the consumer experience and immerse consumers into the future of mobility. The development of the Greaves finance arm will be an additional enabler to the EV industry. As we have been mentioning in the past, our efforts on Ranipet continue, and we are excited that capacity increase will aid us as we go forward over the next several quarters and several years. We've always focused on building our range of products and introduced a new range of products under our non-auto segment, which was one of the areas of diversification a couple of years ago. And happy to report that marine segment, where our engines serve one of the largest fishing communities in the world, has seen additional traction. We've also launched over the last quarter light construction equipment providing more efficient and durable engines in the construction industry. We are beginning to see, even as we get into the month of July, increased traction in both the non-auto segment and the e-mobility segment. Thank you all. I will now hand it over to Mr. Dalpat Jain for a discussion on the Thank you.
Thank you, Nagesh. Good morning, everyone. To give the highlights on numbers, so as Nagesh mentioned, the quarter was impacted by the COVID wave 2, and the lockdowns which started from last week of April continued till the third week of June, and that had a significant impact on the revenues of company. Still, if I compare from the last year's first quarter, which was again impacted by the COVID lockdown, company's consolidated revenue grew by 47% to rupees 229 crores. EBITDA loss reduced from 27 crores to 17 crores. Now, if I look at the individual business units, as Nagesh mentioned, non-auto business reported a healthy growth of 142%. Volumes in the non-auto business grew by 78%. The engines volume in non-auto business grew by 78%. Our aftermarket sales and service and retail business grew by around 27%. E-mobility, particularly the two-wheeler, the manufacturing plant was shut for more than 8 weeks due to severe COVID impact in Coimbatore, and that had its impact on the revenue. But as soon as plants opened, we saw significant demand, and July has been best ever month for our electric mobility business. So demand is continuing at a very strong level with all the government incentives out there. It's the auto engines where we saw a degrowth in the current quarter, and volumes degrew by 16%, mainly because of lockdown and the secondary inventory in the dealer side. So that is going to pick up as we come closer to the festive season. During the subsequent to the quarter, company also entered into an MOU with a developer for selling its land at Pune, the Chinchwad Pune area. The consideration for the land sale is determined at 320 crores, which will be received in 3 tranches. The first tranche of 10% is already received on signing of MOU. The balance will be received in December and March or earlier if the definitive documents are signed before that. With that, I will hand it over to moderator again for opening the floor for question answers. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to only use handsets while asking a question. In the interest of time and fairness to all participants, each participant will be allowed 1 question and a supplementary question if needed. If participants still have more questions, they can join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi. So first question is on this, you said 2 new areas of Greaves Fintech and Greaves Technology. So we already, so over last 3-4 years, we started 2-3 areas we targeted like aftermarket, electric 2-wheeler, 3-wheeler, and non-auto engines, and we have a very large ground to cover still in electric 2-wheeler because competition is increasing. So with all these things where the opportunity is still quite big, aren't we taking too much on our platter going into technology and fintech as well? And also you can just highlight what areas in these 2 verticals we are looking at.
Yeah, I think Ashutosh, good morning. I'll just take that at a broad level, right? Good morning. Good morning. So if you look at it, right, the core business remains our traditional GCL core, which is an engine fundamental where we have taken the manufacturing footprint, made it more efficient, moved everything to the Aurangabad mega site. We had operating efficiencies that we got last year. In addition to that, as we have said, by virtue of the next level of restructuring that we've just announced, we'll get additional operating efficiencies starting FY23, right? And by virtue of both auto plus non-auto combining and diversification with non-auto, the utilization and the efficiency and the throughput increases. I assume you are with me on that, right? So we have made that core business more efficient, more future ready, right? By diversification, auto plus non-auto, point number 1. Point number 2, there are really 2 other businesses, like you said. One is the aftermarket business, and now by virtue of aftermarket business, when you look at it, from 3,000 retailers plus several years ago, we have gone to about 7,000, close to 7,000, 6,700, I believe. From less than the mechanics are now greater than 12,000 mechanics. Greaves Care and Greaves Retail, which is multi-brand service, multi-brand retail, has been added. So now when you look at it, the Greaves aftermarket or the Greaves Retail is really the aftermarket solutions all combined under one focus and under one leader. That's the purpose of that, right? Second one. Yeah. So no change there. Third is the e-mobility, which we continue to get traction in the belly of the market, the 2-wheeler, 3-wheeler segment, which forms 75+% of the Indian population, right? That is just the 3 businesses we are focused on. Now, let me tell you, Greaves Finance is an enabler to our 2-wheeler, 3-wheeler business. About 18 months ago, not very many banks were participating in this e-mobility transition. It's obviously changing now, and our involvement in Greaves Finance was to enable that transition, accelerate that transition of e-mobility, and I think we are seeing traction. So it's an enablement to our core business. Greaves Technology is very similar. Greaves Technology, what it does is we have engineering services arm that focuses on automotive engineering, that focuses on embedded systems, some of the areas that Ampere from a technology differentiation and a technology moat needs to. So it's again an enabler to the core business. So make no mistake about it, it's three fundamentally strong business and two enabler business. So that's kind of it's all coming together with this transition from a B2B to B2B plus B2C. We're getting closer and closer to the consumer, whether it is the spare parts sale or the service sale or the two-wheeler or three-wheeler sale. So that's kind of the fundamental strategy hasn't shifted at all. It's refocused, sharpened, and made efficient where we had efficiencies, and obviously investment in areas where we need investments. That's kind of the thing. Hope that answers your question.
Okay, so basically technology is more like the back end for your electric two-wheeler business to improve that.
Exactly, especially at the high end, as you can imagine. The technology will be a critical enabler for success for the electric mobility, right? And it's no longer mechanical, it's mechatronics and electric going forward, and embedded systems and software. That's where that technology comes in.
Okay, got it. And secondly, it was mentioned that July was the highest ever month for Ampere two-wheelers. So what kind of volume we did in that month?
So I'll look to my colleagues, Dalpat and Arun, if you want to come in. Yeah. So Ashutosh, between two-wheelers and three-wheelers, we did close to 4,000 vehicle sales.
4,000 sales in a month.
Wow.
Yeah.
And how much of that was? And the ratio of high speed would be how much?
Because it is of upcoming quarter, Ashutosh, I may not be able to answer this now. We'll discuss more details.
Yeah, sure, and I think, Ashutosh, if I can just add one more thing to what Dalpat is saying, keep in mind that this was after, like Dalpat was saying earlier, after 8 weeks of shutdown. Coimbatore was one of the worst affected, unfortunately, due to COVID-2, and the plant was shut down for 8 weeks. Our supply chain was shut down. So after that, for both us and the supply chain to start ramping up. So it is just month number 1. So please stay tuned.
Sure. And this was more like wholesale, right? From sales from your side.
That's correct. But retail has also been equally strong, Ashutosh.
Okay, thank you. I'll join back the queue.
Thank you. The next question is from the line of Vimal Gohil from Union Asset Management. Please go ahead.
Yeah, thank you for the opportunity. I hope I'm audible, sir.
Yes, Vimal, very clear.
Yeah, great. So, sir, I want to probably just harp on a slightly more long-term question, probably looking beyond the current quarter, what we've sort of had. Obviously, we've had a tough quarter. But my first question is regarding your e-two-wheeler business, which where you're expecting very high growth going forward. Now, FAME 2 and state subsidies have sort of made if you may call the higher end of the vehicles more affordable in nature. So, given the fact that going forward, the affordability of overall as a country in India is going to increase. You've seen that in the regular bikes and cars that the premiumization trend is very strong even in COVID times. So you have seen premium end of the cars selling very well, premium end of the bikes also doing sort of well over a period of time. So just wanted to pick the management's brains on what exactly are we sort of looking at in the long term? Are we still going to continue focusing on the mid-range or the low range of the market, and if at all we are sort of targeting to go into the higher end of the segment, when do we do so, and do we have the sort of bandwidth to enter the high end of the segment, because competition clearly is increasing big time in that particular segment, and the competition is focusing on that segment.
Yeah, thank you for your question. I'll start off and then maybe my colleague can add. Thank you. Very important question. We have always been very clear that we play in the belly of the market. So when you look at it, right, we typically are in the mid-30s to the 80,000 rupees type of a range, the heart or the belly of the market, right? Point number 1. Point number 2, with some of the government FAME 2 subsidy as well as state government incentives, whether it was Delhi or Gujarat or Maharashtra or several other states, what we have seen is a significant traction in the belly of the market. What we have also seen is significant first-time buyers. These are not IC engine buyers. These are first-time buyers coming into the electric two-wheeler segment. So our strategy of playing in the heart of the market, affordable, last-mile mobility, which moves India, which is the fundamental DNA that Greaves was always about moving people and moving cargo. I think that's our fundamental thesis and will continue to be a fundamental thesis going forward. And we believe that's serving us well because even during the FAME 2 introduction, we stuck to our strategy and we stuck to our positioning. And that doesn't mean that we are not going up the value chain in terms of range, speed, craftsmanship, technology. Stay tuned for more announcements on that in terms of the future. But clearly, the affordable meat of the market or the belly of the market is where we are playing. Arun, if you want to add.
Yeah. So Nagesh, broadly, you have covered the points. I would just like to add one point that, our thrust always has been on the affordable mobility segment. And as we are seeing that with lithium-ion battery price reduction or some of these incentives coming in either through FAME 2 or through the government incentives, we have been steadily improving the proposition of the vehicle, and our average price realization per vehicle every year is on an upward trend. So we are following the market, and as the customer propensity to pay and buy a electric vehicle increases and improves, we will be in the market with the right solutions. It's part of our product roadmap.
Right. So as you call it, sir, the belly of the market. So if the belly of the market is going up to the higher end, if there is a shift happening, would it be fair to assume that Ampere will also change its gears accordingly?
Yes. So it is not a question of capability that whether we can get the right products in that market. It is a choice of customer segments which we have taken, and the price value curve which we have decided for our product positioning. So if the market shifts, we will be ready ahead of time to tackle the market.
And if I can just add, the ASP that Arun was talking about, you can look at your data, where we were 2 years ago to where we are in terms of average selling price. I think it's moving in that direction as well.
Right. Sir, one last question. Any other piece of land that is up for sale, because you've sort of consolidated very well? I think that's a brilliant decision. And any other land that is up for sale, and what are we sort of planning to do with the money that is coming in? Are we sort of planning to reinvest it, maybe probably reward the shareholders on a one-time basis? What is the plan there?
So ultimately, as you know, that's going to be a board decision, but clearly the new money coming in is all going to predominantly be looked at to fund growth capital and investments into the future.
Fair enough, sir. I'll come back in the queue. All the very best.
Thank you.
Thank you. The next question is from the line of Dinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A few questions from my side. First is the fintech and technology arms which we talked about. Just to clarify, these are purely from captive perspective, right? And not would not be offered as a offer to third-party services.
Let me elaborate. So on the fintech part, it clearly starts as an enabler for us. Having said that, though, we do have a lot of interest from others, but we will right now the primary focus is to get Ampere and Ely, our two-wheeler, three-wheeler brands going. Right, I think that's the primary focus. And to this lesser extent, as you know, Greaves multi-brand retail, where Greaves retail can benefit, I think is the primary focus. Yeah.
Okay. And for the technologies?
Technologies, it's still early stage. I'll come back with a full vision, but rest assured that the primary focus is on developing the core expertise within Ampere. But the secondary focus in technology, because that's the nature of the business, is also to benefit other automotive OEMs because they already have a presence today in that area.
Right. And
but
second question.
See the learnings coming in, by the way, meaning that will be where our engineers working not only on our projects but also working on other global OEM projects. There will be synergies, and that's kind of how we see. So technologies will help us actually fast track the technology curve.
Right. And the second question was on the July wholesales, which we talked about, 4,000 numbers. So that is only two-wheelers, right? Or this includes three-wheelers, electric three-wheelers as well?
Jinesh, it is total of two-wheeler and three-wheeler. Not exact 4,000, close to that number for the month of July.
Okay.
In the month of March, we had done 3,800, so it is higher than that.
Right. And but predominantly two-wheelers, I guess, because electric three-wheelers would be very small given the market conditions.
So, Jinesh, I cannot comment further on the details of it, but overall number, total number is more than March number.
Sure. And post this incentives from the government, Maharashtra, State, and Delhi, and Gujarat, and everything, how is the inquiry traction building up? I mean, if you can give some perspective with the March level, are we trending similar numbers, similar inquiries and bookings, or is it substantially higher given that cost to customers has come down materially? If you can throw some light on that as well.
Arun? Yeah. So the inquiry levels are actually much higher than Q4 March levels. Twin benefits to that. One is the FAME 2 and state subsidies. Second is also the petrol price increase. So both of them have increased the customer interest in the product. And like we have maintained in the previous months that it is not demand which is a constraint for us. Today, supply is a constraint for us, and that is where we are focusing on beefing up our manufacturing and supply chain.
Right. And any order backlog number which you can share? I mean, I understand that there is a good amount of waiting for our products on the ground. So any order backlog which should be having with us currently?
Typically, we don't share the order backlog, but it is a very healthy order pipeline, and the dealership interest is also very active in the business. Also, you would have seen our latest campaign where Ampere now has sold more than 100,000 units across 400 plus cities. So we are pretty much present pan-India now, and as the dealership network expands, the penetration will go further, but today Ampere is a pan-India brand.
Right. And last question from my side is on the commodity prices. I mean, particularly the lithium prices have been also going up quite materially in last few months. So, A, have we started seeing impact of that on our cost, and B, what is your expectation of cost pressures on that side, and how do we plan to mitigate them? Thanks.
Yeah. So, Jinesh, you have rightly pointed out the commodity price increases across metal, plastic has impacted the RMC. We are working on some of the new ways of procurement, and we are also doing the localization. So along with localization, the idea is to develop strong supply chain partners who can give us a benefit of volumes as we scale up. So as of now, yes, in Q1, there has been impact of commodity price increases on the RMC, and we expect that to continue for some time in short term. But on a longer term, we believe it is going to get passed on to customer, or we are going to have a better ways of or cost-efficient sourcing chain.
Okay. Sorry, my question was specific to lithium prices. Are we seeing inflation there as well? Are we getting impacted there as well? Inflation has been there. Are we getting impacted there as well?
Jinesh, there in batteries case, because one, obviously there is a pressure on the lithium side, but at the other end, there is overall reduction because the supply base has increased. So in particular in batteries, that's not there has not been an increase overall at a battery level.
Okay, great to know that. Thanks and all the best.
Thank you, Jinesh.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your question to one per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello? Hello?
Hi, Rahul. Please go ahead.
Yeah, thanks. Thanks for the opportunity. Sir, two questions. One, we have appointed a good number of dealers, roughly around 180 post the lockdown, and that's a good number given our base. So how do we look at our distribution network over a period of next 2-3 years? What kind of distribution network do you plan to build? That is question number one. And second, may I carry on with my second question?
Yeah, Rahul. Please go ahead.
Sure. And so we have around 14-15% market share in the EV mobility space, the two-wheeler space. And what we are seeing is many new players have entered the fray, and including now, the incumbents also have been trying to scale up and enter the EV portfolio. So with so many players, how are we positioning ourselves to grow in next 2-3 years with regards to our market share? And how do we look at market share versus profitability as far as the EV two-wheeler space is concerned? So what would be our priority going ahead for next 2-3 years as far as the EV two-wheeler space is concerned? My specific question is with regards to market share versus profitability. Thank you.
Arun, you want to start?
Yeah. So on the first part, in terms of the distribution network, Ampere, like I said earlier, today is present virtually all across the country. We have 400 plus dealerships. There are certain markets where the presence is there, but the depth of penetration is not very high. That is something which we are working on. So there will be some augmentation which will happen as we move ahead. The second part is we are also focusing extensively on the phygital channels. We have been working on digital showrooms and phygital connect with the customers, not just physical retail-based connect. So that is one part which will increase Ampere's play in the consideration set. The second part, when we come to the newer players coming in, etc. We have maintained this in the past as well, that today the bottleneck for the industry is not the product or cost economics, it is the awareness with the customer segments. And with more players coming in, the anticipation is that the industry is going to expand fairly significantly, and we are moving quite close to the inflection point. That is point number one. So there will be enough space for multiple people to coexist. What we have been doing internally is working on some of the basics. So from virtually having only slow speed lead acid based products, our product portfolio is much stronger. Our flagship product Magnus Pro, the demand is very, very good, and it is off the roof actually. That is one part. The second part is in terms of the dealership network from a south-based or primarily Tamil Nadu-based dealership. Today Ampere is virtually present all across the country. We have enabled financing solutions. Greaves FinTech over a period of time will also act as an enabler to this business. The third part is we have also been working on creating technology-based enablers, and like I mentioned, in some of the previous calls, that there are technology areas like controller, BMS, battery pack, etc., which at the right time we will look at developing a deeper play, because these will act as differentiators, because electric vehicle is ultimately a tablet on wheels. So this is where our trust is, to get the basics right, and to drive this, we have brought in a fairly strong professional team at Ampere. The leadership team is in place to drive the business to the next level. So these are some of the foundational steps which we have taken, which we believe will help Ampere have a strong play in the market, even when the full-blown competition is in the market. Does that answer your question?
Just if you could, so initially when the industry, I do accept with the recent measures, it looks like, the industry can really explode in next 2-3 years to come. So will we try to, for next 2 years or so, will market share will be our, will receive much higher focus from our side? Is that a fair assumption?
See, I think you're also leading to your question between growth and profitability. This business is in the growth phase right now, and if you have seen, we have been investing behind, readying up this business for that inflection point, which is around the corner. So there will be investment. However, in the past also, what we maintained that we will be prudent in terms of balancing the growth versus profitability aspiration. So that balance will be there, but whether it will reach the traditional Greaves business level of profitability, I think it will take some time because the business requires investment to grow in the initial stages, at least for the next couple of years.
Yeah,
Sure,
and
sure.
Arun, if I can just add to the gentleman's question, keep in mind though, Ampere is in its 13th year. Like Arun said, we have gone from lead acid to lithium, low speed to high speed, building the fundamentals, 3 platforms over the last 3 years, right? Between our R platform, our Z platform, and our M platform, Magnus, right? How the vehicle operates in various duty cycle conditions, how the vehicle operates at a minus or a 0 degree temperature or a 49 degrees Celsius temperature, right? I think we have seen it. So the capability of the team, the timelines, the going through the learning curve, and now playing in the affordable heart of the market and aspiring for responsible growth or aspiring for growth is definitely the mantra. To answer your question.
Sure, that is quite helpful, sir. Thank you so much and wish you all the best.
Thank you. The next question is from the line of Rajat Fidnikar from BNP Paribas. Please go ahead.
Good morning, sir. Thank you for the opportunity. So I had a question on the Ampere segment. So I wanted to know in terms of inventory levels, if you could add some color as to what levels of inventory would you be working with quarter on quarter, and how those levels would have moved with respect to, we've seen the lockdowns, dealership closures, and also the subsequent reopening. So just a little more color on that would be really helpful, sir. Thank you.
Dalpat?
Yeah. So Rajat, on the inventory, we follow up a ratio to maintain inventory of 1 month sale. And that's how we plan in our electric two-wheeler vehicles segment also. There are some parts which have a longer lead time, but overall at a portfolio level, we look at anywhere between 30 to 40 days of inventory. As you rightly pointed out, in the lockdown, obviously revenue was impacted with the sudden lockdown, whereas orders had already happened as per the 1 month or 1.5 month of normalized sale. So as on 30th of June, there was a spike in the inventory level, but that will get normalized to a 1 month kind of the sale as we move forward. Like on 31st of March, we had inventory of 15 crores in Ampere business.
Okay, thank you.
Thank you. Participants are requested to please limit your questions to 2 per participant. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are.
Very clear.
Okay, great. Good morning, Nagesh and Dalpat. Just one clarification, Nagesh. When you talk about the new structure, what about the agri products? Is that also, being moved into the auto, non-auto engines business, or is it being de-emphasized? And secondly, on the retail side, aftermarket and all the showrooms that you have opened, these 400 showrooms, they are being put together. Is that the correct understanding?
Yeah, I'll clarify. Thank you, Rajesh, for the question. So clearly, when you look at it over the last couple of years, we had combined our genset, agri, lot of our non-auto business under one umbrella. Now, by virtue of the next level of integration, we are bringing in one leadership, right? And the leadership that has been successful over the last 2 years. Agri is still a key part of this Greaves core portfolio. So what happens is the core engine manufacturing facility is all focused on Aurangabad now. We have 2 locations in Aurangabad, but a mega site, right? Efficiencies have been gained. Supply chain have been commonized. Management talent has been optimized from a bandwidth consideration. Some of our best people have been put on that. And Agri and Genset will be part of the Greaves core portfolio. So the Greaves portfolio, just to elaborate, will have our automotive engines, our non-automotive engines, which is the non-auto small engines. It will also have the Agri, it will also have the Genset. But now it is all combined under one traditional portfolio called Greaves Core or Greaves Manufacturing. So that's point number one. Point number two, in terms of a Greaves retail or Greaves aftermarket solutions, yes, the thought process is now let's take a step back. When you look at the automotive value chain, when you look at the, and that was one of the areas from a strategic intent we were trying to go after. Anything post-sale of a vehicle, which is spares, sold through our 7,000 retailers outlet, exclusive and non-exclusive. Our multi-brand service, where we get multi-brand three-wheelers and some two-wheelers coming in for service, right, are basically our own engine spare sales. So when you look at all the aftermarket or what I call post-purchase solutions, right, all, whether it is spares, service, and multi-brand retail. So multi-brand retail now is evolving into not just selling our two-wheeler, three-wheeler products, but also getting into multi-brand retail products, especially in the clean tech segment. So all of that comes under one leader, and that is the Greaves retail, because we believe that's a profitable part of the portfolio, needed a lot more attention, and also a lot more potential for the future. So that's hopefully it clarifies how we are operating.
It does. It does. Thank you. And the second question on the two-wheeler side, could you comment on the market share for the June quarter or for July? And if you can share that whether we are gaining market share or and we are moving up the leadership curve or in terms of market share.
Arun? Hi, Arun here. Let me take this question. So basically, in terms of the June quarter, the challenge was that the factory was closed for almost 8 weeks because of the COVID lockdowns. So that did create an impact for us. But on a steady state, we have been in the 18 to 20% market share band, and hopefully in the next few months, as the supply chain etc. comes back, we will accelerate further.
Got it.
The demand is very strong for the products.
Got it. And then put on the 4,000 units you mentioned we sold in July, how many of them were financed by us versus third-party financiers?
Yeah, so overall financing in the electric vehicle is a smaller percentage right now. Within that, we do a captive financing of close to 10% of the financed vehicles.
Okay, so out of 4,000, how many were financed then?
See, overall, if you look at Greaves finance, it is still at a smaller initial level, and we are incubating. So overall number would be less than 5% of the total.
I see. Okay. All right. Thank you. That's all I have, and all the best.
Thank you.
Thank you. The next question is from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Yeah, hi. Good morning, and thanks for taking my question. Two questions. This first one was on the supply chain side, like we've heard a lot about chip shortages from other OEMs, etc. So are you seeing any constraints in terms of ramp up? Like you said, the demand is very strong, and I'm sure the demand is also picking up further with the government incentives that have been announced. So is there a constraint there, and to what level of volume do you think you can currently ramp up to if the demand is there?
Arun?
Yeah, so chip shortage is a challenge, no doubt about it, and it's affecting automotive players. On the two-wheeler side, we have still been protected, and we are watching the situation very closely, but at least from a next few months perspective, our supply chain team has it covered. So Immediate impact we are not seeing on the chip side, but it is a volatile situation, so we are keeping a tight watch.
And what would be your current capacity? I mean, just to try and get a sense.
See, again, that is right now we have our Coimbatore facility. We have a capacity to go up to 5,000 units on a monthly basis. And as we move to Ranipet, which is a new EV mega site, the capacity will ramp up much further.
Right. And the three-wheeler capacity is separate, right?
Three-wheeler capacity is separate, and again, their capacity is not a bottleneck. So both the locations currently are capable of expanding much larger, handling much larger businesses.
Right. And just on the three-wheeler side, could you talk about, I mean, like, I understand like still 90-95% are lead acid. So on the e-rickshaw or the e-three-wheelers. So what is the roadmap in terms of sort of getting more towards lithium ion?
Right. So what we have done is we have launched lithium ion product for that market. So from a product availability perspective, we are there. The second thing which we did was we were only there on the passenger side of the vehicle. We have also launched a cargo variant of that vehicle, so that either ways, as the market expands either towards the lithium ion market or towards the cargo market, which is showing some signs of picking up, we will be present in both the areas. So from a product strategy perspective, we have seen that. On the market side, shifting towards lead acid to lithium ion, this market is slightly slower because from a initial price proposition perspective, the customer is still okay on the lead acid side. But we believe that over the next 1 or 2 years, as prices of lithium-ion battery prices fall further and some of the customers see the benefits of lithium-ion products, there will be a transition, a slow and steady transition towards lithium-ion in the e-rick segment as well.
Okay, sure. Great. Thank you so much.
Thank you. The next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, hi, thanks. Just continuing on the three-wheeler topic, CESL has issued a tender. Your thoughts on this move A and your interest in participating in the same?
Karthi, sorry, your voice was not clear at the end. Can you please repeat?
I was asking you your thoughts on the impact of this move tender by CESL. How do you see that impacting the market and your strategy for this particular segment?
Yeah, so this tender is, on the electric three-wheeler side. I think the L5 segment is what you're talking about. So this is an interesting area, and we are also looking at how we can look at expanding our horizons, and through our Greaves retail business, we are looking at opportunities. But at the right time, we will come back and talk about it.
How do you see this impacting the overall segment profile? Any thoughts on that? Do you think it will be a bit like what happened with EESL and LEDs? So.
See, there are a host of incentives, be it on the GST rates or the registration charges or the state incentives, etc., which are helping this segment come closer to price parity. Now, with this kind of tender where there is a aggregation of demand, so it will give a boost to the industry. And the way we are looking at it from a product strategy perspective, we will be present in all the right growth areas. That's how we are looking at it. We will have the solutions. We will give customer the choice. Whatever is the best cost-effective solution to the customer from a TCO perspective, between Greaves, Ampere businesses, we will be ready for that.
Right. On Ranipet, when would the first phase be available? So when could you do, say, 10,000 units month capacity, run rate basis? I'm talking about capacity, not volume, sales volumes.
I'll take that, Arun. Yeah, so as we have said, I think we had basically said by the end of the fiscal year we'll be ready. Obviously, we are doing our best to be ready sooner than that. So stay tuned. I think as and when the right time is available. So we are accelerating. The good news is we are running ahead of schedule, and will be getting that plant ready again given the additional demand. I think we are trying to do our best to accelerate. So I think you will see more announcements on that. But definitely this year you will see us moving to Ranipet.
Thank you. And best.
Thank you. The next question is from the line of Gunjan Prithyani from Bank of America. Please go ahead. May I request Ms. Gunjan Prithyani to please unmute yourself if muted from your handset?
Yes.
Gunjan Prithyani, can you hear us?
Hello.
Please go ahead, ma'am, with your question.
Yeah, hi. Sorry. So I had two follow-ups. Essentially, first on this Ranipet, if you can give us a sense, what would this take the capacity to from the current 5,000 units a month that we're doing from Coimbatore?
Yes, I'll take that. So clearly we have stated that we want to get in the first phase to about 100,000, going to 250,000, going to 500,000, and ultimately 1 million. So the plant one will be capable of ultimately going to 1 million units over a period of time, and clearly we will add capacity. I mean, the brick and mortar will be ready. The conveyor lines can be added very quickly, and we can get up to 1 million as soon as demand starts picking up, right? In addition to that, we have enough land for the next 1 million as well. So I think we've already announced that we will be planning for 100,000 going to 1 million. That's protecting for the first 1 million. That's kind of the initial plans.
Okay, 100,000 in phase one. Okay. The second question I had was more broader on the industry level. Clearly we're hearing a lot on, the inflection nearing soon on electric two-wheelers. But fundamentally, there are two constraints which you yourself have spoken about in past is that, financing isn't that optimal. In fact, it's pretty much negligible. And secondly, on the, supply chain ecosystem. Given government has been talking so much, given the way incentives have been increasing, are you seeing any change on those two aspects, financing and the building of localization of the supply chain by the industry?
Arun?
Hello. Sorry, there was a lag in the line. Can you just repeat the question, please?
Sure. So more from an industry level perspective, there are two constraints, right? Financing isn't, banks isn't very, or let's say NBFCs, banks are not very willing to give, lend to this segment because of the resale, there is no establishment of resale value yet. And secondly, also the supply chain ecosystem. So I just wanted to get a sense that given government is promoting this so aggressively now, has there been any change in this landscape that, are banks willing to look at this more favorably now versus past? And
Yes.
What is happening on the building of the supply chain ecosystem? Are we seeing any motor capacity being
I think I'll just step in and that Arun can add details, right? Thank you for the question. So the simple answer for both is yes and yes, right? Point number one. Point number two, just going back to your previous question, I want to make it very clear why the initial capacity is for 100,000 Ranipet. We are fully capacitized to take it up to 1 million should the demand come in, right? That's why we have clearly stated that the brick and mortar will be ready, plant one will be ready, right? As and when we announce the factory start, and stay tuned for more details on that. But clearly, ramping up from 100 to 250,000 to 500,000 to 1 million, I think is all doable in a very short order. So that's one thing. So now, in terms of the financing, we have seen a sea change of difference in the last 18 months in terms of interest level. So the simple answer is yes. Arun or Dalpat, you want to add anything?
Yeah. So that's right. So when we first started interacting with the financing companies in 2018 after acquiring Ampere, the general environment and availability of financing products has seen a sea change in the past 3 years. Today, most of the leading banks have products in this segment, and other thing which is helping is as the industry moves towards registered high-speed products, it becomes easier for financiers to come into the market and finance these products. Unregistered products, there was a challenge. So definitely things have improved. Two-wheeler segment, e-rickshaw segment, most of the e-rickshaws are sold under financing, almost 100%. So there it is very strong, and more and more banks are getting into this. On the supply chain side, there has been a lot of development which has happened specifically since government announced FAME 2 and the phased manufacturing plan. And today we are working with a host of very good quality suppliers, although it has been an effort because we have walked with them on the journey of getting the right products for the Indian market, driving conditions, Indian climate conditions. But yes, the interest has been very strong, and every quarter as we see more and more established names are entering this segment. So as the industry shifts, I believe supply chain, it is a short-term gap, but it should get resolved as the industry, auto component industry in India matures towards the electric side as well.
Okay, got it. Just a clarification. And the motor, all of these are you source it from the third-party suppliers. There is, from a mid to long-term perspective, is there an intent to, look at the backward integration, or you would go with the third party?
Yes. So today we have been working with various strategic partners with whom we have jointly developed the right component solutions for our products. But as we go ahead, we have stated that in the past as well, that as the volumes pick up and it starts becoming commercially viable, we will be looking at backward integrating into certain areas, especially the electronics and software controlled areas like BMS and the controllers, as well as things like lithium-ion battery packs, etc. So some critical components we'll source, and we will have strategic partners for some of the other ones, because at the end of the day, India has a very strong supplier base.
Okay, got it. Thank you so much.
Yeah.
Thank you. That was the last question, ladies and gentlemen. I now hand the conference over to Mr. Nagesh Kasarnhalli for closing comments.
Thank you. Thank you all for your interest. Just to summarize what we said today, our diversification strategy that we started 4 years ago is beginning to pay off. As you have seen continuously over the last several quarters, new business contributes close to 30% of the overall business. Point number one. Businesses have been now restructured for increased focus and higher efficiency. Our core strategy stays intact. Greaves Core, Greaves Retail, Greaves E-Mobility are the core businesses, and the enabler business, of course, is Greaves FinTech and Technology. Third point, our EV presence has been strengthened. We have touched upon the 1 lakh customers, thanks to them on the ground. Channel expansion, EV ecosystem support, and by EV ecosystem, what I mean is financing, multi-brand spares, multi-brand service. It's the entire life cycle experience that a consumer wants. In addition to that, bringing in a lot of digital or virtual dealership experience, especially post the COVID era, and also getting ready for the Ampere experience centers and the changing face of the Ampere brand. Last but not the least, probably as important, is the focus on sustainable development and focusing on our ESG practices, which you're going to continue to hear as we go forward. And last and final, we've also touched upon the Ranipet plant progress, that it continues to advance and we will be informing you as and when we have more news to share. Thank you so much for your time. Thank you for your attention and your interest.
Thank you. On behalf of GREAVESCOT Limited, we thank you once again. Stay safe. With this, we conclude the investor call. Thank you for joining us.